Bank of America Merrill Lynch Chief Investment Officer of Portfolio Solutions, Marion Bartels, in the house this morning. Marion, good to see you.
Nice to see you.
Characterize the earnings period for us. That's, of course, is the backdrop for stocks, right?
Yeah, it's disappointing. We're in an earnings recession. Revenues are declining, profit margins are under pressure, earnings are slowing, and this is really affecting the growth value cycle. So the market still stays growth because when you have a scarcity of earnings, Maria, fund managers will pay up for those earnings. And what you're also seeing is small cap continue to lag large cap. So we continue to think that that's the right investment, to stay with larger cap, higher quality companies, those with good balance sheets and those that can raise their dividends.
Yeah, from a style factor perspective, we call again, we want to be long size, and we want to be long, as a function of that, we want to be long liquidity. But one of the stories within the story there is that the U.S. domestic economy, which is the Russell 2000, 80% of the revenues, continues to underperform. While a lot of people continue to blame, like IBM did, China. People blame everyone but, their own navel gazing. And the reality is that here we are. You got so far 65 companies have reported out of 500. You have revenues down 4%, but earnings are down 10%. And it's not just energy. Do you get that comment that it's just energy?
Well, I never believe that you X anything out. It's important to the total market. I don't get this Xing out.
Yeah.
It's included. Totally, because people are trying to justify the whole move and everything. So I don't think you should exit. What's really been surprising in all the quarterly earnings is the multinationals have been outperforming, despite whether the dollar is strong or not.
So you want to keep buying them?
Yes.
Okay, I want to ask the investment pro something. So we had a 5-year bull market. If we come out of 2015 down a little bit, 1 or 2%, which is around where we are, is that such a bad year? And how does it set the stage for 2016? Does that put the market in a better position for next year?
No, it's not a bad year. I mean, we've had tremendous gains. The S&P is up over 200% from March of 2009, and you have the NASDAQ up over 300%. The issue is a lot of clients just didn't participate necessarily in that move. We do believe we're in a secular bull market, meaning the trend will rise over the coming years, but you still get bear markets. I personally think the Fed took off a bear market. We had all the signs from a technical perspective that the risk was we were entering a bear market.